We're here today with Kevin Cheng from PHL Capital. How are you doing?
I'm great.
Yes.
How are you guys?
Fantastic. Ready to rock and roll?
Absolutely.
How's the private world treating you?
Private world is treating us well. Had a great March so far, so looking forward to continuing the momentum.
Excellent. So people that don't know about PHL Capital, tell us about you.
Yeah, so PHL started, God, we're about 20 years into business now. Yeah, we got lots. I think we've grown to like 30, 40-ish employees now, which is just crazy to think. Getting close. We're about 900-ish billion AUM, so hopefully get to $1 billion soon enough.
Incredible.
Yeah, the growth has just been tremendous, and we have an amazing team, so can't speak enough to that.
Excellent. So what do you folks do? Residential, commercial?
So yeah, we lend in BC, Alberta, and Ontario. BC, we kind of do everything. So we do residential deals, we'll do commercial deals, we will do land deals, and we'll do construction deals. Alberta, we focus more so residential, construction, and commercial. And then Ontario right now, we're just strictly doing residential for the time being.
Kind of a one-stop shop.
Yeah, we try to be. Yeah, for sure. And I mean, in terms of like products, especially on the residential side, so we have fully open, we have a closed product with no lender fee, just a small setup fee, and then we have a HELOC as well. So try to give our borrowers and obviously our broker partner community a lot of flexibility and a lot of options to be able to bring back to their clients.
Right. So we'll come back to the products, Kevin, but I want to learn about you.
Yeah.
What brought you to the private space?
Yeah, so my career started out actually in home trust, just kind of stumbled on that out of university. So the sort of the B lender side, had a great mentor there who kind of took me under his wing.
Who was your mentor?
Mike Forshee.
Oh, I see.
Shout out to Mike. Great guy, runs Glass Lake now. Maybe I shouldn't have given him that plug, but anyways, yeah, Mike's a great guy. Yeah, learned a lot, obviously, just kind of starting out. Kind of realized, like, I guess the thing with the B side, it's more sort of document income focus. You're not really as focused on the real estate aspect of things. And that's really what attracted me to the private space was, yes, of course, we want to make sure our borrowers are compliant, et cetera. But I think the biggest thing with the private side is you really get to hone in on the real estate and really understand valuations, liquidity, what drives the market.
There's a lot of synergy with the alternative and private space too, right? I would say, a lot of common sense lending. So then from Home Trust, you went directly to PHL?
No, so I started a cleaning company, residential cleaning company. Yeah, just
Was that your why?
yeah,
I gotta get us.
doing an entrepreneurial thing, right? And then along the way as well, I mean, I did try to do sort of this B2B sort of technology broker sales as well in between there. Yeah, kind of, I guess you could say I got my entrepreneurial sort of itch. And to a certain degree, I mean, being at PHL in my role, that it is a bit entrepreneurial. You're really trying to drive business home for the business, but also trying to take care of your broker partners. So yeah, it's a great fit overall. So yeah,
Some of the trends that you've seen going on in the private lending space right now.
it's no secret. Obviously, delinquencies are up just in general. We all know the economy is not in the greatest shape. Bit of tougher times these days, but I would say, yeah, we're still seeing a lot of good, really, really good clients that have to come to the private space. Yeah, so I think a lot of self-employed folks, they're just not fitting the boxes necessarily. So they're having to come to the private space for, your 1 or 2 year sort of solution before you can ultimately get yourself back at the bank side. So
Yeah, so you could hear, Kyle's a product guy. I'm more of a relationship person, so I want to still know a little bit more about you. So, it feels like I've been dealing with you for almost a decade now at PHL. How long have you been with the company, and what's your role there?
yeah, so been total now is probably 5 years.
5 years? Okay, half the decade.
Three, yeah, it was 3 and 2 technically speaking. But yeah, my role there right now is just sort of managing sort of BC and Alberta. more so on the business development side, but also a little bit on the underwriting side as well. But primary drivers, so obviously drive more business for Western Canada for us.
So if I'm a broker and I have not done any business with PHL, why PHL? There's, I think, 90 plus mix in BC, right? If I'm not wrong, maybe that number is higher or
Yeah.
lower right now, but there's a lot of mix out there. There's a lot of individual investors. So why should I pick, PHL?
Yeah, I mean, this is gonna sound so cheesy, but I think it's at the end of the day, our business, there's so many competitors out there. I think the biggest thing is service. Um, our products can be similar. We might be a little bit cheaper than these guys, we might be a little more expensive than others. But I think at the end of the day, you call us, you send us an email, we get back to you quickly. We try to get answers very quickly to brokers because we understand, your broker side, you're having to deal with the client who's probably calling you 10 times. Hey, where's my commitment? What's going on with the file? So we get the urgency, especially on the private side. So I think service is the biggest differentiator for us. And I may be biased here, but we're really, really good people to work with. I think, I've heard it from a lot of brokers. They just love talking to us on the phone. They love doing deals with us. That's the feedback we've gotten. So I think that's kind of a special sauce, I guess.
Service is what everybody promotes.
Sure,
So what would that service look like? Let's say I've never worked with PHL.
Yes.
What are some expectations that I should have? Reasonable expectations.
Yeah, I mean, so, if it's a pretty simple, standard file, we can get commitments out within 30 minutes, 1 hour. If it's a little bit more complicated file, obviously we promote the 24-hour turnaround time, but we are usually a lot faster than that. It really depends on the complexity of the file, but if in terms of like turnaround times, that's roughly what we'd be looking at. So yeah.
Right. So would you say then, besides service, because you talk about complex files, so it seems like you don't really have a bucket per se where, something comes in, it's 50% LTV or 60% LTV. It's, a yes or no. Yes, those deals are there, but at the same time, there's some common sense lending involved.
Yeah, for sure. I mean, I would say so obviously we have our preferences, but at the same time, we have to look at each file on its own sort of merit. Um, the biggest thing I think is like, we don't necessarily have a minimum beacon score. Now, are we loving foreclosure rescues?
Yeah, you don't have a minimum beacon score at all?
We don't.
Oh,
So,
wow.
but are we loving foreclosure rescues at the right loan to value? Yes. We're not going to go, max LTV, for example, on those, but it's really, the best way to say it is we have, I would say, a circular sort of box, but there's some leeway in certain situations, right? So at the end of the day, we need to understand the file, and it comes back to what you said, Asim, just the common sense lending. Yeah, I think
Yeah, which is very much needed right now, right? Because you don't have those. The equities have been down for the last 2-3 years. They've been still, and then on the other side, people are in foreclosures or they're going through tough times. So common sense lending does make sense. And when I think, a majority of those 90 plus mix, I would say, I don't know if the number's 90. I could be wrong there, but majority of those mix do have that circular box, right? So, and I think when our brokers have worked with your office, it's usually deals that they've come back and they've talked to me and they said, hey, this deal, it made common sense. We went to a few lenders, majority of them didn't want to do it, but it's low LTV, but you guys made it happen. I think one was inventory financing. It was like a large deal, some
Yes.
developer had finished a project and, he had, leftover townhomes and you guys gave him 50 or 55% loan to value.
Yeah, yeah, we definitely, those options are out there, right? So it's hard. It's hard in the sense of, trying to communicate that to the broker community that these are our preferences, but if you have something outside the box, we'll still obviously take a look at it. And I think what gets sort of lost in the private space as well is, and maybe I shouldn't promote it as much, but I hear it back from a lot of brokers, is the quick no. I hear a lot of complaints just in terms of like, I guess, other lenders thinking they might be able to do the deal, and they kind of hold you around for 3 days, and
Yeah, they keep
at the
asking
end of the
questions,
day,
and they
at
they
the end of the
already
day, they're not doing it right. So our thing is, if it's a deal we think we can, sort of push forward, we'll definitely dive into it further. I'm just saying, if you called me up randomly on the phone and you kind of ran it by me, right? Like, if it's something that I think really doesn't have any legs to it, I'll just sort of let you know right there. And then, then you can move on to the next guy, right? Why waste another 20, 30 minutes for you to put the package together, send it over, when I know this isn't a deal that's necessarily going to work for us, right?
So, Kevin, who's putting money into your MIC? Is it individual investors, institutions?
Yeah, it's majority individual investors. So we don't take that lightly, obviously. A lot of people with their hard-earned money, TFSAs, RRSPs. So we have a very sort of disciplined underwriting model as well. Just on the investment side, we don't obviously take that very lightly.
And this is for some of our brokers. Of course, we educate them. And Kevin, you've done an amazing job coming, doing presentations. But I still want to understand, if I'm a broker, I've not done business with you, what's your ideal property type, borrower? Like your lending areas, things like that. Is it residential, commercial? Just give me a brief synopsis.
So majority of our book is residential, and I mean that's the bread and butter of our MIC. We obviously love the commercial stuff as well. I would say it's mixed bag. Like, what I would say to, new brokers that are coming in that want to learn the private space, like, one, how do we identify opportunities? What sort of business are you doing continuously right now? Are you primarily conventional? Okay, well, maybe we find some opportunities where your clients get declined at the bank for whatever reason. Maybe we can step in and be a bridge for them while you work to get them back, basically, right? So I think it really depends what avenue the brokers are sort of doing their primary business on. And then we can obviously expand on that, right? So commercial, we can get into what we look for in that, construction, land. So yeah, there's a lot of different varieties, but I think really just honing in on, especially new brokers, identifying opportunities, and how can we help?
There's some unique opportunities that I'm aware of, and you probably deal with quite a bit. Spousal buyouts. Are you doing a lot of those?
We have not had too many, but we have had a handful. I would say more than usual. But yes, that's something we'll definitely look at. Just name others off the top of my head. Paying out CRA, back taxes. We can do that. We could also do. We see it a lot in East Vancouver. Just the stratification. So
Massive levies, right?
yeah, so we can
Massive
come
strata
in,
levies popping
refi,
up.
or sometimes the conventional lender won't sign off on the stratification of the property into two duplexes because they thought, oh, it was a residential mortgage. So that's just one sort of example of a bit of a unique space that we can come in and really help clients in those situations, because they can't sell if they don't have two sides.
So let's talk bridge financing. How does that work, and are you seeing a lot of it?
Yeah, so we are seeing a lot of it. I think for us, we definitely do a lot of bridge financing. It's not your conventional term, and what I mean by that is, I definitely know some lenders will just kind of ignore the loan to value per se and just know that there's a firm sale in place and what have you, and just kind of go, very, very high LTV.
So I have a follow-up question to loans to values. What is your max LTVs? And second to that is, what are your prime lending areas in BC?
So max LTV 75 on residential, and then commercial max is 65. Construction, I would say max is 65 as well. In terms of lending areas, lower mainland, so we'll go as far east as Chilliwack to West Vancouver. We do lend in Squamish and Whistler as well. And then on Vancouver Island, we're really in the capital region, so Victoria, Colwood, Langford, Saanich, Nanaimo on Vancouver Island, and then the Okanagan, Kelowna, West Kelowna, Penticton, Vernon, and Kamloops. Those are the areas we lend in. So really just sort of your more populated areas of BC, I would say. So Yeah.
And when you say 75% loan to values and 65 on commercial, is it first or seconds?
We could do both. We can do first or seconds up. End of the day, like we don't really differentiate. So, we get asked sometimes, oh, if you guys do a first, will you go, higher LTV if you're only going to stay at 70 on this? It's no, this is our comfort level if we're a first or a second. So it just kind of keeps the messaging consistent as well. So
I get a lot of brokers ask me this recently because of the condo market. The loan to values on those are been, when banks are scaling back. What are your LTVs on those at the moment?
yeah, so I would say the overarching guideline is 65. I would say, especially the pre-sale market, we all know we're typically lower of purchase price are appraised. I will say though, there are odd instances where you have these low rise, not necessarily brand new, maybe 4 or 5 years old, where we actually do see really good liquidity in those, and on the odd occasion we can stretch to 70 if the overall profile looks great, but those are sort of few and far between. But at the end of the day, we got to see the liquidity. If there's really good liquidity in the building and stuff selling, we may be able to stretch LTV in those instances.
One thing brokers wants to know, and I mean, this is important because then not to send, where to send their business to, but what is the common reason you see why you may decline a file? Like the most common reason out there.
I would say negative influences associated with a property.
With the property, not the
Yes,
borrower.
not the borrower. So what I mean by that is it on a busy road? Is there a bus stop in front? Is it across from a cemetery? These are all things that, I don't think brokers, any adverse influences, but a lot of stuff, it's very, I guess brokers might not necessarily pick up on that stuff. And so, we could have the greatest borrower in the world, but if the property, is in front of like a substation or something like that, we obviously would have to, that would pose a lot of risk. So we either scale back the loan to value on that, or, we might just pass on it altogether, just depending on it. Right. So I would say that's the biggest thing of why we're either scaling back or declining deals.
And what about development properties, because as you know, there's a lot of them out there, and usually there are sometimes, have a residential home on it, nothing developed, so they haven't gone through the rezoning process. I'm assuming that you do use the residential value, but you still lend on them.
Yeah, in those instances, we would still lend on the residential sort of as is value for development land stuff. But yeah, in that instance, if you haven't gone through any readings or anything like that, we would, it would just be residential.
How about inter alia?
Yeah.
You'll do inter alia, so security of 2 or more properties to lower the LTV?
Yeah, absolutely. We'll definitely do that. I mean, that other deal Asim was talking about earlier, I think that was like 13, 14 properties. So, yeah, as long as obviously the deal makes sense, we don't really have a cap in terms of how many properties we can take. So
Can it be a mix of residential and commercial as part of that
yeah,
inter alia?
we can. We've done that before as well. So yeah, as long as it strengthens the file, makes the deal work, we're more than happy. And a lot of the times, our team does a great job of you might need 70, 75 on a deal. We might not think we're going to get there on this because of, like I said, adverse influence. But hey, do they own? A lot of our team usually will go back and say, do you have any other properties we could look at tagging to try to make this deal work? And at least it provides another option. Maybe the client doesn't want to give it up, but at least it provides a pathway to potentially doing the deal with us, right? So, yeah.
So you've touched upon construction, you've touched upon many of the things you do. What about land loans?
Yeah, so I would say,
The smile on your face sort of told the story by the
everybody kind of knows what's going on in that space right now, but I mean, we're still looking at them. I think where we've had success is
covenants are super strong.
they're super strong, but also the residential service lots, we're still, values have come off for those as well, we've seen, but those are still, we could still get our heads around those, I would say. So we're still seeing success there. And realistically, on the the development land side, I mean, if it's a purchase like today on today's value, that's something we'd be a little more inclined to look at, obviously. But yeah, everybody knows challenging environment. We're still looking at them. It's just realistically, it's very, very tough to get those across the
Yeah,
finish line.
no, 100%. They are tough at the moment. And I don't blame the lenders, right? Because you're seeing the condo market, and whether that be high rise or low rises. But there are townhomes. There are still some developers who are super strong. So bought the properties relatively cheap, have no mortgage on it, right? They're doing development as well. So those are the deals I was referring to. So thank you for answering that.
Kevin, let's talk about private lending interest rates in general. In the past, they were what, 10, 15? They could be all over the map, 10, 15%. Like they were high, right? We're in a bit of a unique space right now, and interest rates, they start off as low as on a residential A-class file.
High fives, low sixes.
That's pretty awesome.
Yeah.
That's very close to conventional lending.
Yeah, I think especially new brokers, there's a big misconception when and even with the borrowers in general, right? Like they think private lending and they think, oh my God, like these guys are just sort of out to get us basically, right?
Guy in the alley. Hey,
Yeah,
I have a deal for you.
Exactly. I think that's just obviously a big misconception, and just continuing to educate. That's the biggest thing we can do, not just like PHL, but obviously, others in our space, just continuing to educate, like, we're here to provide a service to help you get out of a jam, give you breathing room, or, yeah, I would say those are probably the two biggest scenarios, or just give you a bit of a stopgap to obviously get you back. End of the day, we want it to be a temporary solution. We're short-term lenders. We want to be there for you, but at the end of the day, we want to get you back to conventional with the banks, with the credit unions. That's the ultimate goal. So it's kind of a journey, I would say.
And the other thing I think I find is people, when they hear the word private itself, it is something like some private, and there are private individual investors,
For sure.
but they forget that MICs are regulated.
Yes.
They're institutional lenders. They're not like charter banks, but they're still regulated by the Securities Commission, BCFSA, and Securities Commission. So and that's the part I think as brokers we educate. Our brokers know this very well, because that's part of our culture, to make sure that they know, therefore their clients know.
So you talked about training the broker, right? Education.
Yes.
So how can a broker grow in today's environment when working with PHL?
I mean, from our perspective, we really want to develop trust and transparency with our broker partners, and it goes a long way. And what I mean by that is, every deal we get, there's always a story. What's the use of funds? What's the exit strategy? Those are kind of the two big things. And the broker partners that we've developed really great relationships with typically would execute. Like, I'm going to refi these guys with a bank within a year or 2 years, and they execute on that strategy. Not saying it's going to be 100%, but we see a pretty good track record of that. And so that just creates the trust factor with us, because we can rely on you. Now, whenever we get a deal from you, and in particular, we know that you're able to follow through on what you're necessarily saying with us, right? So I think especially in the private space, that is the biggest key at the end of the day, is the exit strategy. And if you can execute that, I think any broker will develop great relationship with any lender that they're working with once they see that track record happen. So
it makes a lot of sense. And the fact that you're putting your time into helping them get out of that, or execute that exit strategy with their client, they're also building trust with their client. So it's everybody wins.
It's definitely a win-win. And what I always say is, your clients, a lot of the clients, at least that's what I heard from the broker community, is, they don't really remember you for getting them into that 6-7% private mortgage. They remember you for getting them back into the 3-4%, conventional mortgage. So it's a great journey to be able to go through. And I think any broker who can obviously work that journey properly, they'll find a lot of success.
Kevin, you talked about going and venturing off in different businesses, and then you started your career with PHL and total 5 years with them. Why PHL though? There's so many mix out there. I'm talking to this guy right here. He's super smart, funny, and honestly, he can go anywhere,
Yes.
right? So just it can't be just the money. What else is there about the lender?
I mean,
And I'm not applying for a job, by the way.
yeah. I mean, I would say the biggest thing with any organization, it starts from the top down. So our CEO, Steve, our founder, Parm, like if you ever meet these guys, like they're just amazing guys. Just, your everyday Joe kind of a person. And they've created a really great culture at PHL where, different personalities can kind of just shine. They're not trying to temper anything, I would say, in that regard. And I think just the people we've hired, we're all sort of like-minded. We're all rowing in the same direction. And so that just kind of creates a bit of harmony in that sense. Like, we know what our goals are. We know what our vision is. So we're all trying to pull that way. And obviously, gonna give a special shout out here to obviously our VP of sales, Aaron Dura. We were in the trenches together back in the day. So he's been a great sounding board for myself, and we work very closely together. So yeah, couldn't ask for better leadership, better management, and honestly a better team.
What I'm hearing is growth, right? I
Yes.
always tell my brokers, if you're not growing, you're dying, right? So, you're all working, it seems like, and as you said earlier, that you guys have reached almost $1 billion, 900 some million dollars, odd dollars. But my point is, that growth is what's keeping you there,
Yes.
right? And you see that in the leadership, and from top down, it seems like everyone's working in their own space, right? And being supported by the group.
So Kevin, I've heard something about a HELOC product that PHL offers.
Yes.
I don't know about this.
Yeah, so HELOC product, I would say the impetus was, again, getting feedback from our broker community. What do you guys want to see? We heard it overwhelmingly. We want a HELOC product. Okay, great. So we sort of put it together. So just to break it down, it's a first or second mortgage, residential deals only. Really good flexibility in that you get one free draw a month, one free pay down a month. Minimum is $5,000 to pay down or draw every month. And we do this all in-house. So it's a 24-hour turnaround time. Don't have to go through the lawyers, etc. And then last but not least, yeah, we only charge interest on whatever's advanced. There's no standby fee, fully open. And last piece is minimum advance is 25 grand. So you just have to keep that balance at all times. But if you don't want to use it, no sweat off your back, no sweat off our backs, I guess, to a certain degree in that regard. But yeah, we've seen quite a bit of success with it. And I think a lot of the times right now, especially in today's environment, I think people are just taking the minimum, your 25K out, and they just want to fall back. If I need this cash later on or down the line, I have access to it.
Wow. So it works somewhat like a bank HELOC, essentially.
Yes, it does to a certain degree. There's obviously no portal or anything. You can just do yourself. But, we always just tell, borrowers, just reach out to your brokers. And obviously brokers will reach out to us like, hey, my client wants some money. Great. We'll get that.
And do you need to renew that HELOC each year?
It would be, yeah. So it's still a short term. So it's still 1 year or 2 year term for the HELOC. So if you think you're going to need it a bit longer, we can do the 2 year to give that flexibility. But yeah, standard is 1 year. Yeah.
Who's using that product the most right now?
I would say from the files we have seen, Kyle, it's typically been what I just sort of alluded to, in that they don't need all the money up front. Like, they take the minimum 25K and they just want to have the peace of mind that they have access to the rest of the funds if whatever comes up, what life happens, they have access to that capital. So it's obviously quick. We turn it around similar to a residential deal. There is an arduous process to have to go through to get it. So yeah, it's pretty standard, but
That sounds like an amazing product. So if I want to learn more about that product or other products that you have that are maybe in the works or that currently exist, obviously I can go to your website for some of that information.
Yeah.
Is there a mailing list or anything?
Yes, absolutely. So website, you could sign up for our mailing list there, or if you don't want to fill out the form, you can just send it over to me. I'm happy to do it for you guys. And we obviously have, one pagers as well that I always share with brokers. We have a closed as well, a closed product as well. So, yeah, just these one pagers. I know it's a lot of documents at times, but it does get into the nitty gritty of the different products, and hey, expanding knowledge is never a bad thing.
Kevin, as a Mick, what is your biggest concern heading into Q3, Q4? Is it deal quality, exit risk, or capital drying up, to be honest?
That's a good question. So we got 3 great choices. I would have to say deal quality, if I had to choose one of those, just because I feel like we all know what's going on in the world right now. People are, losing jobs, and things are a little bit tough these days, right? So, it might be sort of more lenders fighting for, a smaller piece of the pie to a certain degree in terms of the actual quality deals that are out there. So, yeah, me personally, I think that's probably my biggest concern if you were to ask me heading into Q3.
Yeah, I would have answered the same thing. I mean, I do lending as well, just on a smaller scale, right?
Yeah.
And then we have investors as well. And deal quality is what keeps lenders afloat, right? And borrowers afloat too, because, you're lending money to people who can essentially have the ability to repay their mortgages. And if they can't repay for some reason, they have a way to exit out of those deals.
So how do you see the market evolving in the private lending space over the next 5 years? Your personal opinion.
I think there's going to be more regulation coming down the pipe, unfortunately, but I think it can be interpreted as a good thing in certain ways, getting some bad actors out of our space. So I think that would be the biggest thing we're looking forward to.
Yeah, that's an amazing thing.
Yeah.
We've all been waiting.
Yeah.
So within our brokerage, we love the way that the regulators are going about ensuring some of the bad apples in the industry, they're weeding them out. And I'm sure PHL Capital, you would agree. And what are some of the steps that you think they're doing a great job at?
Yeah, I think the biggest thing is, we had sort of touched on it, but this whole mail out thing, when there's an event that happens, letting the whole community, lending community, broker community, mortgage community know the facts on what happened. And I think that just kind of creates a warning for brokers, like, hey man, like this isn't a joke, right? It's people's homes that we're dealing with at the end of the day. So
when the regulators send out an email and let everybody know this is what transpired and this is how they are being penalized for their wrongdoings.
correct.
I like that too.
Yeah. I think it's necessary. Again, as you had said, Kyle, just to weed out the bad actors. So
Yeah, I think another thing they do, the notice to hearings to the public, right? Also lets the public know that, hey, you got to watch out for this individual. So, shout out to BCFSA and shout out to PHL and shout out to our lovely brokers who have partnered up with PHL and many other lenders. When we talk about PHL, when I talk about PHL, I don't put them in a bucket. And I think that's what Kevin talked about. That's what the feedback I received from many of our producers who are doing a lot of volume. You've done some of our larger deals where, it was from residential homes to people coming in with 13, 14 townhomes, inventory financing. So you are that common sense lender at the end of the day who is not within one box. Sure, you have these two mix. One is a bit more aggressive and the other one is a bit more conservative. And that's, that's cool because that allows us to send you deals which will fit within that box.
We talked about common sense lending. What is common sense lending to you?
I think for us, me personally, it comes down to empathy, not only being empathetic to obviously our broker partners who I deal with on a daily basis, understand the struggles they're having, with certain files and what have you, but also to the end borrower, really understanding their story, and just trying to identify with that. I think end of the day, it's you kind of have to go past the numbers all at times and really just get into the nitty gritty on the deal itself. So
Thank you for being here, Kevin. We'd love to have you, brother. We'd love to see you again. Thank you so much.
thank you so much for having me, Asim. Thank you, Carl. Great to see you.